Hey, welcome to our SheFi Expert Series. We are talking about real world assets. They are a leading narrative for the crypto space in 2024, and SheFi is doing this in partnership with Goldfinch. I have Poe and Taylor with me, and they're going to tell us everything we need to know about real world assets and give some practical advice of where you can get started to learn more and see if this asset class is right for you. I'm Maggie Love, the founder of SheFi, and I'm here, as I said, with Poe and Taylor. Poe and Taylor, would you please introduce yourselves?
Sure. Poan, you want to go first?
Oh, I was going to say the same thing, but sure. Hi, everyone. So my name is Poan. I'm the head of community with Warbler Labs, contributing to the Goldfinch protocol. Quick journey in crypto is prior to this, I was at Coinbase, working with the community and social teams. And before that, I was at X, FKA Twitter, working on communities. And that's where, saw the proliferation of crypto Twitter and all the conversation around communities and got super excited. And that's when I knew I had to be in this space.
And I'm Taylor. I help lead business strategy and operations at Warbler Labs. Kind of my introduction into the space was more than 2 years ago. So I was formerly at Morgan Stanley working with some of the top family offices, a lot of whom were interested in the blockchain space as it related to kind of access and accessibility, and then also efficiency and just transforming different industries that they themselves built in. And then before that, I was working for a boutique impact consulting firm, working with brands, celebrities, startups, and then large kind of more traditional firms as well.
So my next question is, Taylor, we'll start with you. What attracted you to working at Warbler Labs and on the Goldfinch protocol?
Great question. I feel so, as I mentioned, I joined almost 2 years ago. And as I was evaluating projects in the space, it was the project that stood out to me most that actually connected blockchain and crypto to the real world. And so there was this promise of kind of transforming and revolutionizing the financial systems. And at the time, there wasn't really anything out there that was the bridge to the real world and to real world businesses. So when I came across Goldfinch, I was like, oh, light bulb went off. I was like, this is it. This is the first application connecting it back to the real world. And so then from there, I evaluated the team, which was kind of a world-class team. I evaluated the opportunity and then the chance to work on the leading edge of emerging tech. So I was like almost sitting on the sidelines, evaluating, researching, and helping family offices invest and get involved. And I was ready to really roll up my sleeves and kind of build something from the ground up.
That's an awesome story, really linking all of your experience and bringing it into the crypto space. Poan?
Yeah, I mean, the team is a great part of it. I get to work with Taylor here. But what attracted me was I really believe you learn best by doing, and wanted to scratch my own itch of getting smarter around investments. And when it came to crypto investments, I was working at Coinbase. I was comfortable with, investing into some Bitcoin, some ETH. I had purchased some NFTs. I was working on the NFT marketplace at Coinbase, and was just also like very fascinated by community aspect of Web3. But yeah, when it came to DeFi, I didn't really feel super comfortable. And actually, we had this DeFi lunch hour at Coinbase every couple of weeks, which I loved. It was very educational, and people would share these different projects. But I still didn't feel like comfortable in investing. And I think that there's only so much you can pick up from listening to a product versus actually having skin in the game and investing in something and seeing how it grows. But yeah, I didn't really feel comfortable. So that's where when Goldfinch came in and I was evaluating opportunities, it just seemed so simple and it made sense. Like, okay, two-sided marketplace. You have investors that provide capital, you have borrowers that need that and can provide some kind of yield. So that just really made sense to me. Loved the mission of actually providing a real world impact. They had such a good track record already. And I just thought, all right, this is where I want to be. And I want to help onboard more people in this space and educate people. Again, that's why it's so awesome to be invited to this talk today, Maggie.
Yes, and at SheFi, we're big believers in on-chain experiences, really building that confidence and building in this space, really giving you that experience you need to, make a big impact. And what is the Goldfinch protocol?
It's funny to hear Poan say, oh, it's quite simple because it did start off as a marketplace, but I believe at the beginning, it was even difficult for me to explain succinctly and shortly, but I think we've finally got there. I would describe it as a decentralized global credit protocol with a mission to connect the world's capital to the world's growth. And the best way to explain it is that Goldfinch will be an operating system for lending, the same way that Shopify is an operating system for e-commerce or for online stores who want to sell their goods, or the same way that the iPhone is an operating system where developers can build apps on top of it. So Goldfinch will be that decentralized global credit protocol. And I think in the first couple years of the protocol, the community learned that it will be really hard to grow this protocol unless you have those players building on top of it. And it's really hard to convince some businesses to move on chain. And so what we realized is that to grow and scale this protocol and make it done in the 1.4 trillion private credit business, we need to support many separate, let's say, centralized branding lending businesses. You could think of these as like the large private debt issuers in the space, or let's say more asset managers like BlackRock. And to do that, we needed to become, or Warbler Labs ended up saying, okay, let's test this out and do proof of concept and show people how like impactful this can be, which is how Heron Finance, which is one of the players building on top, came to be. And then in short, this is kind of nailing the operating system for one business, and then the next, and the next, and then the next. And so in the long term, it should create this shared ecosystem of interoperable lending businesses that are all transacting and working alongside each other. So hopefully that is a more simplified version. It still sounds complex when I explain it out, but we think this is perhaps like the easiest way to explain it.
Yes. So it's a protocol. You hope that many businesses build their lending offerings on top of it on the blockchain in a decentralized way. Is that a good summary?
Exactly. Great job.
And before we get more into real world assets, I was looking at Goldfinch and one of the protocols and seeing that you take assets like USDC and you offer them to people all over the world for their businesses. And people in Africa are now having access to these loans. Can you tell us a bit more about how that works?
Sure. So the way it works is that, again, we are only kind of everyone, I would call it, I'm like, okay, what's the best way to go about this? The way it works is that a borrower, so it could be right now, it's credit funds or fintechs or business, like real world businesses who need to get a loan. And to go through the banks, it usually takes a lot of time. And then they also are offering or they're providing really high rates right now. So we can offer, the protocol offers more competitive rates and can also execute this more quickly. Because we're using USDC, that means all investors are supplying capital to kind of these borrowers in USDC. And the way it works in Africa or Asia is that they can then kind of accept the USDC and then convert that into whatever their native currency is. So there will have to be an off ramp on their end. And then they put the kind of those funds to use in the real world. And then when they come back to make a payment for the loan, they then convert it back into USDC and kind of pay into the protocol.
I really love what Goldfinch is doing because we're seeing that global marketplace happen. I think we talk about it a lot, but really to go on your website and to see that people are getting loans in Africa and Asia is really exciting. And it's one of the reasons that I'm in this space, increasing that global impact. And so thanks for giving us a bit more details. Let's go into what RWAs are, real world assets. How would you describe them in the context of the blockchain space? What is a real world asset on the blockchain?
Colin, you can take this one.
And you can always chime in with thoughts. RWA is kind of, this funny name, and it's a bit polarizing in the blockchain space. I mean, I've heard people say, okay, what's real world? Does that mean Ethereum isn't real? And when we say like RWA, most people in the space, they get what it means. Like they know, okay, Goldfinch, we do private credit, that is a real world asset. And it's gained a lot of traction and recognition as a term. But just stepping back a bit, maybe a more helpful way to distinguish this and like where the tension comes is thinking about whether an asset is crypto native versus taking a traditional financial asset and then tokenizing it and putting it on chain. And again, just for context, not sure the audience, but a framework to use that might be helpful is just, okay, you have these assets, there's representation, ownership. We know in the real world that uses consensus from legal contracts, enforcements by courts. Then we have all of us that are in the crypto space that know that you can get consensus from the distributed computers and enforcement from these machines and smart contracts. So putting that all together in crypto, RWA is really an asset that has the ownership rights, core of the blockchain, but it's not as volatile as the other assets that we think of in crypto, like tokens, because we're actually representing this traditional finance asset class.
So we can think of real world assets as in assets that exist in the real world. They're not natively born on the blockchains. Like the Ethereum token natively exists on Ethereum. It was born on the blockchain. It doesn't exist anywhere else in the world. And real world assets are assets that are off chain, and now we're bringing them on chain through certain means, through tokenizing them.
That's great. And then I think we had this funny talk just before we went live. I think the other tension was that, again, I don't come from traditional finance. Like, I'm here to learn and improve the system. So maybe Taylor or someone else can comment on this. But one other tension was that, RWA already means something in traditional finance. Like it means risk-weighted assets. So I don't know if you have additional thought there, but that was something else.
Yeah.
Most people.
It definitely is funny because I think a lot of people building in, let's say, the real world asset or DeFi space also come from somewhat traditional backgrounds or have exposure to traditional finance in some way. Whether they like it or not is a different kind of question. And so to hear people say, yeah, RWA does mean risk-weighted assets. And so people who are in traditional finance are like, wait, what's this acronym mean? It's not intuitive to them. And then the other thing that I think why we're moving more towards the name of like tokenized asset coalition, and Poan can speak more about that, is again, like in traditional finance, everything is a real world asset. Like everything is in the real world. And to make the distinction of like, oh, these are real world assets, it's almost like adding a modifier to something that doesn't need any further explanation. And so again, if we're continuing to, let's say, bridge and work along and really try and like integrate DeFi and SeFi and like more traditional finance, we definitely, it's kind of, again, all of my traditional finance friends were like, wait, why are you calling it like real world? Like they already are real world. Like why? It seemed like duplicative. So yeah, that's a little additional context color.
That makes a lot of sense. Sorry, I didn't mean to jump in there. That, is the internet the real world, right? Then that kind of brings in like a confusing layer, like what is real, what is not real. And to give people a bit more context, what are some of the different categories of real world assets, or what are some examples of these? Now I'm like, I don't want to call non-real world things, or what is, I'm getting hung up on it. But for the sake of this conversation, what are some categories or examples of these real world assets that protocols like Goldfinch are bringing on chain?
Yeah, and I'm a big fan of examples to just really help make the case clear with definitions. And so the most ubiquitous real world asset would be stablecoins. So we have USDC, US dollar coin, or I think we're calling it digital USD now. Like there's some rebranding last week.
Okay.
And so that's really, we can be fans of that if it makes it more accessible and brings on the masses. But yeah, in that case, you're taking a traditional finance asset class, the dollar coin, and tokenizing on chain so that you have this digital representation of it, but it's also backed by this tangible asset in the real world. And then once you have that USDC, digital USD, you can actually take the benefits of blockchain. So transact more efficiently, quicker, 24/7. And that's actually what we use at Goldfinch is USDC, so that we can pool the investor funds, distribute it to borrowers, these fintechs in different markets, and then use those same rails that Taylor mentioned for repayment. So when you asked that question about the companies in Africa paying back with that same digital dollar and bring it back to us. And then as for broad categories, one way to think about it is like, what is that thing being tokenized? So I just shared the example of the dollar and digital dollar. There's also been talks of tokenizing real estate or commodities, luxury goods like wine and fine art. Another dimension that's very relevant to us at Goldfinch is the concept of a yield-bearing RWA. So in our case, we tokenize private credit. And so that's also just to define private credit is these are loans made to businesses through private means. So again, spirit decentral finance, you're not using a bank, you're going to private investors. And then as a form of repayment, these borrowers then pay back every month some kind of interest, and that's the incentive for investors. So that's a kind of yield-bearing RWA, and a couple more categories of yield-bearing would be treasuries and tokenizing U.S. treasuries. That's seen a lot of growth, and then again, yeah, like real estate and stable coins are kind of like a different category.
Yes, I believe I heard MakerDAO is also tokenizing U.S. treasuries. And correct me if I'm wrong, but the purpose of tokenizing like assets like that earn interest for those of us in the United States is so more people globally can take advantage of these interest-bearing assets. You don't have to live in the United States now to get access to a U.S. Treasury bill. Is that like the reason behind this?
Yes. And if we look at when treasuries, like let's say tokenized treasuries exploded, it wasn't necessarily, it very much coincided with when the US Treasury rates and kind of like US interest rates were raised. And so then you had a very compelling, it was, 5%, 4 to 5%, almost risk-free yield on chain. The only risk that was really presenting was kind of like the tech risk there. And so I think Arca was one of the people or one of the firms who had already tokenized treasuries and looked into it. And I think there are varying aspects based on where the issuer is or who's doing it, like whether you have to be a qualified purchaser or a US accredited investor. But there are, I think, Ondo or some other tokenized treasuries do offer access to the rest of the world. And so if you still see, let's say, the US dollar as like the kind of global, I don't know, like the gold standard, obviously not gold standard, just the colloquial phrase. It's incredible for, let's say, investors in Africa or Asia or these other emerging market countries to have access to a stable, risk-free return that they otherwise wouldn't be able to access.
Yes, that makes a lot of sense. And just once again, I feel like this use case is such a reminder of like what we're trying to do here, actually expand this open permissionless finance and give these different types of financial opportunities to people. It's exciting to see. And you hit on that a reason that at least tokenized US treasuries started taking off was when their interest rates started getting high, and it's easy to lend to the US government. They're most likely to repay you, which is why people like lending there. They have ways of always repaying their loans. But what are some other reasons that RWAs are starting to take off now? What are some of the trends? Because we've been attempting to put all kinds of off-chain assets on the blockchain since around 2017 or maybe earlier. What do you think is some of the trends or themes that are getting people really excited about this use case, especially going into 2024?
Yeah, I think Taylor touched a little bit on that, broader macroeconomics. When I think of back to the area of like DeFi and yield, I didn't really understand. It was driven a lot previously by new tokens, and there was lots of really compelling, attractive yields, but of course there was a lot of risk. Again, my personal opinion is that's all very speculative. I don't think we've done our obligatory, this is our own opinions, but just going to put that out there. And so back then, when you had these very high yields, then this form of like traditional finance, RWAs, like treasuries of 5% or our returns of like the 8 to 18, it wasn't as appealing because it seemed very minimal. But now with the rising interest rates, the fact that we've had been in this crypto bear market, there's been a lot more interest from some of those crypto natives that were looking for different forms of yield through like the treasuries and private credit. And then just speaking from a Goldfinch perspective, I like to talk to our community members a lot of, what's the value do you get from us? Why do you invest in us? And a lot of their reasons are for that diversification of trying to find something that is like a bit more stable. And in general, I believe people are trying to look for the reward of off-chain mechanisms, but using these on-chain channels where you can take advantage of some of that benefit of blockchain and transparency.
That makes a lot of sense. Taylor, do you have anything to add?
The one thing that to add is less macroeconomic, but more so technology driven, is that
Mm.
in the past, let's say year, and I think with the emergence of L2s, it also allows anything that's on chain. And so I know, for instance, Heron Finance will be leveraging Base. It allows the cost of transaction to go like down significantly. I think Base's motto or Base's goal is like less than 1 second for less than 1 cent. And so, for instance, like before when you were transacting, you had to pay upwards of like $100 in gas fees sometimes. And so, even for institutional investors, in addition to like your everyday individual investor, I would say like a lot of the promise of real world assets is to drive more cost efficiency, and that wasn't necessarily being
Mhm.
realized on L1s. And so I think in addition to macroeconomic conditions, we also have, let's say, better technology or more like technology that's more conducive to the players who are in the RWA space, where it now is realizing like, okay, this is not only better from an accessibility and interoperability standpoint, but it's actually becoming way more cost efficient than when it was built on L1s. So that's just one thing that I think is another driving force.
Yes, I used to lend into Aave back when it was like 11%. I don't know, 2020, 2021, all the years kind of blend together. And I'd have to be like, I have to do the calculation like,
Yeah.
okay, if I put my money in for, a year or however long the yield stays interesting to me and I take it out, like, am I going to pay what I earn that yield just in Ethereum transaction fees? So we're really all excited about Base, Optimism, the super chain, all the layer twos out there. I don't want to say we favor one over the other, but the fact that we can actually have these cheaper, faster transactions. And because I also came from like the fintech space as well before this, um, you know, the things we would try to sell when we were talking about blockchain was these cheaper transaction fees, instant finality, going from T+3 to T+0 for settlement. And then when we kind of don't have that, it's a bit of like yeah, sorry guys, like this is supposed to be the future of finance. So exciting that now Goldfinch and the protocols on top of it can leverage cheaper chains. Something else I want to touch on is we talked a bit about what these assets are, how we classify them. Maybe we're going to call them tokenized something assets instead of real world assets, much like the dollar stablecoin is going through a rebrand. But like, what is this process of tokenizing? Because I think a lot of people are aware of what it's like for that blockchain native asset to exist. Go to smart contract, mint it, and there's a lot of benefits to that. But when you're getting a real world asset on chain, there has to be some human intervention, right? We can't just necessarily like we have some trust still, or maybe I'm wrong. What is that process of getting something off chain, a more complex financial asset onto the blockchain?
I would say there's a few different players approach it in different ways. We can try and, let's say, simplify it as soon as possible, and I'll almost give a step by step. So like
Yes.
you have to choose the asset, right? And so Goldfinch does loan agreements. That is what our asset technically is. Or if you think about Heron Finance, it's like participation agreements in a loan. So that's what we have to tokenize. You can, again, let's say it's a piece of art. From there, I would say step two, that more and more RWA players are doing, and that we have to do compared to like your traditional crypto native, is to make sure it's legal and regulatory compliant. So that's number one. Then the asset, either before that or after that, needs to be valued. So it can be audited or valued. And then this is part of it. And then step number four, I would say, is then creating the smart contract. So that is the contract that governs the token. It can have details like ownership, the kind of like, let's say, price, etc. Kind of setting what is for us, it's like, okay, what's the term? So how long is the loan? And then it's then issuing, I would say issuing the tokens. So the way it would work on the Goldfinch protocol is we have a smart contract. When an investor comes to invest, they end up receiving an NFT. That it represents their participation, how much interest they are owed, what is their portion of the loan that they've invested in. Again, I would say then there's verification of that asset. And then once those are collected, you can, in theory, trade it on platforms. And then there's ongoing management and governance. So I would say that is like my step by step of how an asset can be tokenized. Again, there's, I would say, several different approaches. I know Centrifuge does it differently. And other players do it differently as well. But Pawan, maybe you have an even simpler version to share.
I thought that was great. I mean, that's giving a lot of the different steps and even our examples.
And what are some of the challenges that Goldfinch has noticed, or you've noticed with other players in getting these assets on chain through this process?
Another great question. So I think even somebody in the chat was like, okay, what are some of the challenges given like limited internet accessibility, geographical difference, cultural difference? And so a lot of times with off-chain loans, there isn't necessarily a one-size-fits-all legal template. And so if the legal template, or let's say like the legal document, is the asset that is being tokenized, that has to be almost like that is the most important part of the process. And so that still takes time. And so a lot of, let's say, the off-chain challenges is making sure, like, how do you actually increase the process of reaching agreement on a legal agreement or a legal contract? And so we've looked to templatize that. And so that was also a barrier to entry for some borrowers, because they could spend upwards of like 30,000 on a kind of like legal fees in order to get that contract. So that's one challenge. I would say, again, the other challenge, and it's not necessarily, it's kind of like all the other off-chain elements. So for instance, if a loan goes into default, the question then becomes like, okay, what is the path to recourse? Who's responsible for then kind of dealing with the borrower and understanding what kind of like the path to getting repayments or to kind of obtaining the principal. And so that is another. So like any off-chain challenges still exist on-chain, yet we have to deal with some of these in the off-chain world. So that's another challenge. Pawan, you probably have perhaps a couple others.
I was going to just a high level say that there's still off-chain challenges of having to deal with humans that have their inefficiencies. So I think, again, Taylor did a great job of summarizing some of that.
Yes, I think we've learned through the decentralized autonomous organization, or the DAO hype over the past couple of years, that coordinating humans is actually pretty hard. Like, I think that coordinating infrastructure, coordinating the flow of money might not be that complicated. It could be done very well through technological consensus, but getting humans to coordinate is still quite a challenge. So there's still a lot of humanness involved, even when these processes reach the blockchain. And you touched on, we've heard the term, there's like borrowers, there's lenders. Who are really like the key players in this landscape, or like who makes up the RWA space?
Yeah, I mean, I don't claim to be an expert here, and that's why I do want to shout out our friends at RWA.xyz. I feel like they've done a really great job, so that's a resource in terms of creating dashboards and analytics, research, and reports around this overall landscape. I will say they've been very focused on that yield-bearing RWA asset class I mentioned earlier, so around other private credit players like us. They do have a lot of information around the treasury players, and they're coming soon is on real estate and stable coins. But just to talk, I guess, about our space, some of the other players and names people may have heard is like Centrifuge and Credix. We actually partnered with them along with better make sure I get all the names right. Our partners at the Tokenized Asset Coalition, that's also Coinbase, Base, Circle, and Aave, to bring more awareness around, to answer your question, like the overview of the RWA industry landscape, do more research and reports. And of course, that's just the founding team that I mentioned. We also want to expand that. But I will say, and this, again, not where I have the expertise, but in addition to these categories, there's also the underlying protocols where RWs are built. So like Ethereum, Polygon, Stellar, and then a lot of blockchain native services that support the trading of RWAs, treasury management, the custodial services. But that's not necessarily where I have a lot of in-depth knowledge, and defer to the folks that do present more about each one of those.
And the website, just so people on the live stream can do their own research, is rwa.xyz. And then it's the tokenized coalition, or the tokenized asset coalition.
You got it.
Okay.
Yeah, there was actually a lot of talk around like, oh, should we just call ourselves the RWA coalition? And because it's a recognized term, that's why it's the topic of this conversation today. A lot of people know it. But then as we thought about, I guess, in the spirit of rebranding, onboarding more people, being more inclusive, and really using a title that describes what we mean, that's why we went with tokenized asset coalition. Even though it doesn't have as much brand recognition, the hope is that will change with more adoption and as we bring on more people into the coalition.
Yes, I love that. You've touched on that twice now it's called the dollar, digital dollar, the digital US dollar, and the tokenized asset coalition. I hope that in 2024, more of us working in the space take on that ethos, that it's been really fun to name things in this space without thinking about all the people that we want to use it. But the purpose of this, especially bringing assets people are already interacting with in this physical space on chain, we've got to use words that will excite them, that they know. There's something like you have 10 seconds on a website to get a customer's attention. So that's not a lot. So if they're seeing like RWA and maybe they don't get it, they're like, okay, I'm not sure if I want to interact with that. So I'm a big fan of this group shepherding in more terms that people will understand and hopefully be attracted to. And I really think that aligns like with the ethos of, what bringing these assets on chain is trying to do. So how has this, and we touched on this too a bit, but maybe if you have like a specific story or more general, how has bringing these assets on chain impacted the global accessibility and inclusion of these different types of asset classes or investment opportunities?
That's a great story. That's like a great question. And I think the best example for us to use is Goldfinch and what we know. And so, for instance, as you mentioned, we have borrowers from South America, Central America, Southeast Asia, who were able to raise millions of dollars in capital in the span of 6 weeks to 12 weeks at max. And their loan would usually be filled within days, or let's say within a week once it went live. So that is incredibly accessible. And not only were they only borrowing from a bank or let's say a bunch of private credit lenders who are larger players in the space, but they were able to kind of borrow money from a global ecosystem of investors. And so if you look at where some of our investors were investing from, there were US-based investors, there were European investors, there were also investors in their, let's say the borrower's country of origin, because they wanted to invest in their own ecosystem, and they actually didn't have a way to do that despite living within the same country or within the same city. So that's one example that I think we're really proud of. And then Poan can even speak more to this, being kind of our amazing head of community, because she is in the Discord and talking with the investors and with the borrowers, and probably has way more specifics than I do.
I love what you shared though, because Taylor's been here longer than I have and has seen a lot. And I remember hearing stories of how exciting it would be to like open this new pool and just filling within hours, minutes. Like it was so fast because you're using that speed of money transfer and really getting a global audience excited about this opportunity. But then in terms of some specifics of what I've heard from people too, is that not only are they pulling from all these different sources, and that helps with the speed and getting it faster, but what I understand from some of these emerging markets is that unlike, in the US, there's a spirit of innovation and investing in these innovative fintechs that doesn't always exist in these other geographies, where governments feel more comfortable investing in, say, large infrastructure projects. So like, oh, roads, we need those, that's stable. So let's just pull our money there instead of the fintech. So that's been an area where we can really lean into that mission of being global and inclusive and really solving this problem that folks that have, again, very profitable and promising businesses. They just can't get access to that type of capital.
I also want to call out JIA, JIA. They, Zach is the founder, co-founder, incredible company. And they are focused specifically on countries in Africa where, let's say, somebody who does taxi driving or kind of like Uber Eats-esque work, I don't know what the equivalent is, and I think he might be working specifically in Nairobi, is able to transfer over, let's say, oh, they don't get paid unless it's in monthly increments. JIA is able to give them their payments in much quicker, let's say, turnaround times. And so he's able to continue his work. Let's say, if, oh, you need the money to go get gas or to improve, or like, let's say, oh, you need to bring your car to the mechanic. He's able to do that using JIA and participating with JIA. Versus like he would have to wait a full month until he could get his car serviced if he was working in the traditional confines. So I think JIA is a great example. They're working really, I would say, on like much more individual level, whereas Goldfinch is working more on a business or kind of like larger scale player level.
Yeah, that's incredible. I think that too, sometimes we forget that like global automatic payments is an amazing use case. Maybe we forget about how important that is because, at least for me, transacting in the United States, I don't really experience that. Now, I do experience that when we host SheFi events all over the world. For example, in Turkey, which was very hard to transfer money to for a variety of reasons. And I ended up like going to an ATM and like pulling out a lot of cash. And every time I do this, I'm like, at these events, we should have a day where all the vendors come in and we get them set up on these payment rails. We get them exchange account, even like it doesn't have to be full decentralized, and really help people get that money right away. And all of the challenges and even disputes that can arise for waiting for payments to take months, which it can sometimes, even when you're just transferring across borders, is really important. And I think because it feels like so table stakes for crypto at times, those automatic payments, we forget how important that is to people all over the world, especially in places where they're not getting invested in either at the enterprise level or the individual level. So I love both of those use cases because it just reminds us that, once again, this is a global technology. And I think a lot of the use cases we've been talking about today, we might not think about in the United States as much, or other countries where these payment systems aren't an issue. Mm-hmm. And something else,
I think that's a great idea for an event.
Yeah.
Oh, sorry.
Yeah.
+1. That
I know,
great.
Right? I'm like, I think that we need to just bring everyone together, get them signed up on their leading exchange, and just help them get some stable coin and then help them get it off. It wouldn't be that, it wouldn't take that much time. So maybe we can collab on that for the next SheFi Summit. We'll be all over the world next year. So I'm sure we'll need to do that. And something else I wanted to touch on, and we'll also look at the chat for some questions. The chat's pretty active. So if you have a question that you want us to cover today before the live stream ends, please do not be shy. I like to remind the SheFi community, when we ask questions, everybody actually learns. So it might not just be on your mind, it might be on many people's minds, but we all get to learn. So it's a great way to support our learning. We've talked a bit about RWAs, and actually before I get into my next question, I was thinking here, we've heard the terms like investors and borrowers in the Goldfinch protocol, and we know that the borrowers are these more fintech companies. We've heard about that, but who are the investors? If I wanted to join Goldfinch, I saw in these pools, and the pool is where the money is lent into, or you can probably explain that better, but maybe we talk a bit more about the protocol. So we have investors, like let's say I'm not an accredited investor. Could I join a pool on Goldfinch? And like, what is this pool that borrowers are borrowing from? Can we talk about that a bit more? Because if you go on Goldfinch's site, they have like 17% interest on some of these pools. And that sounds pretty exciting to those of us who like to put our USDC to work.
Yes. So the way that it works on the Goldfinch protocol, and I would say our team specifically took a very regulatory compliant path forward, is that anybody outside the US can invest. They just have to pass a KYC, kind of like AML check. But in the US specifically, given the regulatory uncertainty and knowing that we had these evaluated. It is only open to US accredited investors. What that means is, like, again, this could be borrower specific, but we just decided to do that from a regulatory compliant perspective. We built Heron Finance on top of the Goldfinch protocol, and Heron Finance will actually only be open to US accredited investors. So no international investors at this time. And again, this is because our Heron Finance is an SEC registered robo-advisor, and we're operating within those confines. There's no reason then, let's say, a Singapore credit fund or a Singapore player in the space can come and build on the Goldfinch protocol and have it open to, let's say, Asian investors or to like all international investors or non-accredited US investors. It really depends on who's coming. And so that's how, let's say, Goldfinch protocol worked in the past. And now that I would say the protocol is really leaning into supporting these more centralized players building on top of the protocol. It will be kind of, let's say, developer or whatever the new project or company or fund is, however we want to describe it, deciding that on a case-by-case basis.
That makes a lot of sense. Regulatory first approach, I think, will work out well in the long run, even though for many years, I even remember when I joined the space in 2017, I was like, we can do whatever we want. It's the wild, wild west. And obviously we're feeling the impact of that in the United States, where it's not as friendly. So since Goldfinch is a protocol, there'll be many types of lending offerings there. And then each team will decide, like, what makes the most sense to them to open it up to certain types of investors and take on the risks that inherits. Okay, cool. Anything else to add?
No, you nailed it.
Okay, awesome. Yeah, and I guess the next question I have, and we'll see if there's any questions in the chat as well. So let's talk about getting started with RWAs. So now we have like a decent understanding of what they are, who some of the players are, where to go look after this session and learn more. But if we were thinking about, wanted to do a deeper dive and like figure out how they can even partake in real world assets, what steps should they take and what should they be aware of?
I would say good news is that if you are holding any USDC or digital USD, you are already started. You've already gotten started in the real world asset space. That's just my first note. But Pawan, I will toss it over to you.
Oh, that was great. Way to set it up, right? I mean, that's how you onboard people, letting them know it's easy, and maybe you're already participating and doing more than you think, so there's less hurdles. But even back to my whole like obligatory, I think we're supposed to say like this is our opinions. Also the whole like this is not financial advice. Do your own research. I believe there's always kind of like a risk reward trade-off balance, and knowing what you're investing in, knowing the terms. I'm going to again speak from the Goldfinch model. Something that we emphasize a lot is that when investors are pooling their money into our investments, like it's not super liquid because this money is out there, the real world, doing real stuff. Like that's like a talking line our founders always say, like it's doing real stuff. It's helping this business grow. It's helping with operating costs and hiring. So you can't just call that back so easily. So that's something to keep in mind of like, what is your investment horizon so that this is not something you can expect right away. That being said, something interesting that the Goldfinch team did earlier this year was actually listen to the feedback of a lot of folks in crypto. They do value that instant liquidity, the 24/7 trading desk, the instant settlements. And so to appeal to that desire of faster liquidity, there was this deal that was launched on the Goldfinch protocol called Fast Financial, where it was introducing a new business model, but also new like technical integrations and smart contracts. And it was called a callable loan. And the idea was that you could actually call back some of your initial investment within 90 days, which is a lot faster than say like a 2-year loan, which is some of the typical loans that were previously on the pool. And actually that loan just closed, so everybody was fully paid back, and it was a really great success case where we actually had some initial investors that called back some of their deposits, got that back, and in this case the borrower wanted to call back earlier, and that was fine too. Like everything behaved as it should. Everyone got the returns, yield that they expected, and everything was closed without a hitch. So I guess in summary, like I guess I'm really focusing on knowing the terms and when you'll get your money back, just knowing that a lot of crypto audiences want something really quickly. And in this case, also how it's been very interesting to see how business models and technology can adapt to serve new use cases.
Yeah.
Anything to add,
And
Taylor?
to add on that too is to Powen's point, like do your own research. So if these are real world assets on chain, again, not financial advice, but my recommendation is to approach these and evaluate them the same way you would in like the typical Web2 like financial offerings, right? And so like when you go and you're opening up your savings accounts, you're usually evaluating across like, okay, what's the interest that I would be earning on this? Or if you're opening, let's say like a Wealthfront or a Robinhood and like looking at these traditional like Web2 platforms, just approach the RWA space in the same way. Something that we learned with Goldfinch, and I think can be true, is even like private credit isn't necessarily like an intuitive asset class. It's not like real estate where everybody's familiar with real estate, or art, people are familiar with art. Like private credit is complex and it does take a special skill set to be able to evaluate that. And so in much the same way that people come to SheFi to learn, we're hoping that through, let's say, the Heron Finance newsletter and other aspects, that we can educate people on private credit so that they understand what they're getting exposure to, and then also rely on experts. So again, Heron Finance will have a team, does have a team of like with deep expertise in the private credit space. But if you go to RWA XYZ, there's tons of experts there. And through the Tokenized Asset Coalition, there's also a lot of educational opportunities as well. So like my advice is like, okay, just because it's RWA on chain, just take the same approach that you would approach any other investment opportunity. And then also I think what's really important as part of this, the tech stuff, is I really value like customer service and being able to understand like, okay, this does seem a lot different than Aave or than Curve, which we might be familiar with. And so I think understanding and being able to talk to the team about, okay, if I have questions, how does this work? I think the RWA space does pride itself on being very like user centric from this perspective, because we know it might be a little bit more difficult or not intuitive to the crypto native as it could be to a more traditional investor.
All amazing points. And Taylor touched on something I was going to highlight as well. But before I do that, so know your terms, know when you're going to get your money back, and then treat this asset class like you would a Web2 investment. Really get to understand it. And ways you can do that is through this RWA.xyz and the Heron Finance newsletter. So we'll be sure to share all that out. And going back to actually what both Poan and Taylor mentioned, so we're familiar with Aave. When you lend your USDC into Aave, let's say, it can be for as little as 1 Ethereum block. It can be 5 blocks. It can be 5 months. It can be 5 years. You can call your money back. As Po was saying, you can get your money out of the protocol anytime you want. And that's really why we're excited about protocols like Aave and other lending protocols. But with something like Goldfinch, you're lending to a business. So you're lending to a business. On Aave, you don't know what you're lending to. You could be lending to a business, but you're lending to a business that has expenses, that probably has the term for like a year or two. So you have to be aware that you're not going to be able to get that money back right away. Not that it's not a great investment opportunity. You'll just have to remember, how long do I want to have my money locked up for, and diversify accordingly. So thanks for walking us through that and reminding us, if you're holding USDC, you are already engaging with real world assets. I saw a question here that said, please talk Heron Finance, AI robo investing. Why did Heron build on the Goldfinch protocol?
Powen, you want me to take this one?
I think you'd be great at it.
Okay, so first I just want to clarify is that Heron Finance is not AI robo investing. So I would say the rebalancing, or let's say like the reallocation of what your portfolio is actually done by smart contracts, kind of governed by math equations, and understanding like, okay, what is the ultimate like diversification strategy that also hits what your risk tolerance is, or kind of what return you're seeking. And so I think I might have mentioned this at the beginning, but again, we learned in kind of supporting and building the Goldfinch protocol is that you really need a centralized player, or that kind of intermediaries need to exist. There has to be trusted players in the space that can facilitate, or let's say, like, again, that investors trust to be doing a lot of the credit evaluation and underwriting. And given that we had, I would say, upwards of like 14 borrowers on the protocol, no one borrower was necessarily like building the like the strongest evidence. And again, we had, I would say, like a stagnant period of about like 18 months where our active loans weren't necessarily growing. And so again, the approach with Heron Finance is to be a centralized player who can build and grow a really strong user base, leveraging Goldfinch's blockchain technology that then can convince other centralized players to build on top of the protocol as well. So that, I would say, is kind of the case for Heron Finance and why our team specifically decided to do that. I would almost think of it, I don't know if you guys are familiar with kind of Farcaster, the decentralized social network, but you have the team that is building the decentralized protocol, and then you also have the team building a centralized app, Warpcast, that is attracting a lot of users to the protocol. And then from there, it attracts other developers to build on top of the protocol because there's already users there. There's already proven kind of success, although still early, looking for product market fit. And I would just say, like, we're doing the same thing, but in the private credit space.
Yeah, thanks for answering that. Protocol allows many type of applications to be built on top of it. So Goldfinch is like that layer that's underpinning all these new lending businesses. And another question, yeah, I'm not sure how familiar you are with commodity RWAs, but someone asked, what is the future of commodity RWAs? If that's
this
not
is
something
definitely out of my wheelhouse.
No, that's okay. I guess you can either. Okay, so
let's say the best way. Let's see. I can like let me take a stab at it. But again, it's about turning like physical commodities, like let's say gold, oil, or like maybe agriculture, into, again, these digital tokens that can be traded on blockchain networks. I don't think energy necessarily counts as a commodity, but it might if you think about oil. And there is flow carbon. So I don't know if you guys are familiar with flow carbon. I think it might be one of Adam Newman's kind of his crypto company as well. Yeah, I know Adam Newman, like polarizing name, but they focus specifically on energy. And so if we think about, I think the commodity space, I think what flow carbon does is like, oh, there was actually like no green or like green secondary market. And what they're looking to do is like, oh, we want like an energy futures, or this is me guessing. This is not, do not quote me on this. Like I need to look more into flow carbon, but they are creating, like, let's say, an actual market so that these energy futures, or kind of whatever the primitive is, can be traded. And therefore it creates a much more thriving ecosystem. And so I think the same can be said about commodities. I don't necessarily think it will be gold, just given like how gold is already somewhat accessible. But I think if you look at oil, if you look at other commodities, this could be really interesting. So that's my personal take on it. Again, I'm not a commodities expert, but that is something that I'm excited about, especially if, let's say, the commodity itself isn't, let's say, like as accessible or has kind of lower liquidity because there isn't a secondary market.
We appreciate you taking a stab at it and sharing what you do know. And someone asked, does Goldfinch tokenize commercial bank deposits?
No, we do not.
Okay.
Not to say that no one else can, but I think there might be other folks looking at like CDs and other commercial bank deposits that Goldfinch doesn't.
Okay, I'll scan for one more question. And if not, like, we've talked a lot about Goldfinch being a decentralized credit protocol and loans and USDC as this real world asset. And Po-An touched on a few others at the beginning, but and we just talked about commercial RWAs, but what are some of the other types of real world assets that you're excited to see come on chain, or in 2024 if they're not already here?
That's a good question.
Well, Maggie and I just met at Art Basel, so like art
Yes.
is sort of top of mind. Of okay, like, I remember I was there the year 2019 when it's like $100,000 banana. Not that I would want that, but this last couple of weeks, seeing these really beautiful pieces, and I think that's been one promise of tokenization of these assets. It's like, okay, well, I might not be able to afford this $100,000 piece of beautiful art, but if I could have a fractional share, then that could be one way to invest in it, support the artist, but also have a way to sell it on a secondary. Like back to, again, Goldfinch, there's no secondary place to sell it, but with something like art, there'd be an easy way to move that somewhere else, sell it for liquidity. But yeah, that's just top of mind because where I was a couple of weeks ago. But Taylor, I'd love to hear what you're excited about.
No, I'm also excited about art. I think there's another company called Flexport that was doing kind of like tokenized participation of, let's say, like Andy Warhol's iconic paintings. So that's also exciting. I think instead of the asset, like what real world asset I'm most excited about, I think I almost maybe more excited about what larger players are coming into the asset tokenization space. And so I just also want to give a shout out to Coinbase's Project Diamond, which is part of its asset management business, but they're also enabling like institutional adoption of blockchain. So they are like almost the most trusted name in crypto. They also have the largest distribution. They already have partnerships with large financial players. And so they basically is a smart contract powered platform that allows users or institutions to buy, sell, and create native assets digitally. And so if you think about what is possible with Coinbase, that's also like incredibly exciting to me. I think the first, let's say, digital asset that was settled was a debt instrument. I think it was just a loan. But if you think about this in terms of art or in terms of other real world assets, they're also making it like incredibly easy to be able to tokenize assets and then also accelerate the RWA space, generally speaking. So that's what I would say I'm most excited about for 2024 is these larger players coming into the space and the opportunity to partner with them.
Yes, that's super exciting and important for the legitimacy of this space and the legitimacy of the technology. And in a former live stream we did with Aya Kantorovich of Fractal, we talked about some of these banks actually doing transactions of more complex financial assets on chain. So that's really going to be helpful and hopefully help us in the regulatory space as well if Coinbase is onboarding large institutions and global entities. We talked about a couple of these things, like where people can get started, but can you do a quick refresher of like where people can get educated on RWAs, on private credit? Where should they be looking at? Where can they find the coalition? And then after that, like where can they follow both of you and anything else you want to share with them?
Yeah, maybe I'll start. I think I just love also, Taylor, like a lot of the shout outs for other people building in space when you talked about Gia, Coinbase, Project Diamond, or when I was making sure I cite everyone that's the founding member of Tokenized Asset Coalition, is that something that has been really great in terms of the space of RWA, tokenized assets, and everyone being very collaborative, because we all do want to see this larger scale adoption. Like Taylor saying, being excited around the institutions, I'm just excited and more mainstream that can come onto here, not just the crypto natives. And yeah, shameless plug, that's part of what we're trying to do with Heron Finance, is just make that onboarding a lot more accessible. So that would be one place to check out. But also back to the Tokenized Asset Coalition, like there are those 8 founding members, but definitely the intention is to grow, with the main pillars of the coalition is to advocate for this industry, to educate people, again, through research reports. I think I can say sneak peek, something's coming down the line. Like it's been a while since an announcement, so definitely early 2024. Stay tuned. But then also like building together, finding more partners to join. So I mean, for that one, RWA.xyz houses a lot of the Tokenized Asset Coalition reports, in case that is an easier acronym to remember. So I'll pause there with those resources. And Taylor, if you have anything to add to that.
You're spot on.
Okay, great. And where can people listening to this live stream find both of you?
On X, formerly known as Twitter. So I'm Ted Not Lasso on Twitter, and then or X. I think everyone's going to continue to call it Twitter.
Yeah.
And then I'm also at Ted on Farcaster or Warpcast.
Cool. And SheFi team, shout out to you, Maggie. You've done a great job of like tagging us everywhere and sharing our socials. It's my initials, POY meets world. I use that same handle across the board. Also on LinkedIn, use my real name. So yeah, feel free to connect with me. Always happy to chat. Community, Goldfinch, Heron, what we're building, how to partner, tokenized asset coalition, all that good stuff.
Yeah, you both have iconic handles, Ted Not Lasso and Poi Meets World. I love it. And someone asked, can we drop the link to the tokenized coalition here? We'll drop it in the comments of this live stream on YouTube, and feel free to reach out to either Poyan or Taylor with any questions you have. Find their Goldfinch protocol on Twitter. It's Goldfinch_Fi. See who else they're working with. And definitely, if you're in SheFi, follow up in the Discord with any questions you have. Thanks so much for sharing your expertise with our community, and really excited to see what is next for Goldfinch in the new year.
Thanks so much,
Maggie.
Maggie. Our team.